Okay, everybody, welcome back or welcome to this session. The next session is the future of fintech and insurtech. So as these people leave and make sure we can actually be heard on stage, the glorious acoustics of the Guildhall, just a few quick remarks before I throw to Hannah Bernasconi, who's going to lead the panel. Over the last decade, fintech went from a challenger to infrastructure in many markets, and I would not be without my Revolut card. Over the last decade, so now with higher interest rates, tighter regulation, very different funding conditions, investors start to ask harder questions about where the next generation of returns will come from. And I think insurtech's followed a bit of a similar pattern, some big promises, some breakout wins, and then a lot of business models being quietly rethought. So hopefully today, in the next half an hour or so, we'll look at where the capital is actually being deployed today in fintech and insurtech, which models can sustain real margins under the new conditions, and how founders should think about maybe partnering with rather than simply disrupting incumbents who, after all, still have these massive balance sheets, licenses, and large incumbent users. So, Hannah, over to you.
Everyone. Hi, nice to meet you all. Very happy to be here with you to moderate this discussion. My name is Hannah. I lead VC partnership for Revolut Business, and I'm also a head of sales for the Baltics and Nordics region. I had an intro prepared, but you covered it all, so I think we'll just crack on. We have 4 amazing speakers with us today. I'll let you guys introduce yourself, please.
Hello, everyone. My name is Ogugua, Osakwe-Adegbite, a bit of a mouthful. I am at Partech Partners, where I sit within the Africa team. Partech is a multi-strategy investment platform in VC and growth equity. Across the platform, we have roughly 2.5 billion euro under management. In Africa, it's 450 million euros. And we invest at Series A, B, and C across the continent in tech-enabled businesses. I specifically focus on exits.
Hi, May, managing partner at Anthemis. We're an early-stage VC investor, so we invest at seed, pre-seed, a bit of A as well. We are historically known as being fintech investors, but the thesis has broadened quite considerably, and we closed our Fund 3 recently last year in the generalist fintech space. We are also expanding into an AI-focused strategy, and lastly, we also have a venture debt strategy.
Hi, everyone. Great to be here. I'm Iulia, one of the partners at Ascension, an early-stage fund that started back in 2015 in the UK. To date, we backed over 150 companies, had 15 exits, including a fintech one, credit kudos to Apple in 22, and also most recently Monolith AI to CoreWeave. We have 2 sort of like kind of investment strategies. One of them is a journalist strategy, so we invest in anything and everything as long as it's sort of like kind of tech product. And then I sit on our thesis-driven funds, from which, again, we've done fintech for quite a long period of time. The thesis is around, I guess, all like kind of investing in the foundational infrastructure that allows people to live better and better and basically consume better. So for us, fintech is all around what enables, and again, is that either on the B2B side of things or B2B2C or B2C, what helps people increase their income or decrease the household costs. So yeah, that's us in a nutshell.
Hello, everyone. This is Kaan, managing partner at Tenity. We are a Swiss fund spin-off from Swiss Stock Exchange. We have our 3rd fund currently investing from. We've been historically investing in pre-seed and seed. That's why we have roughly 300 portfolio companies. Asset under management is closer to $250 million now, hopefully growing soon. We've been investing in financial industries, so it's a little bit getting hard to talk about what fintech, what insurance, what is financial services, probably we will discuss. But the idea for us is basically seeing what is going to happen in fintech and insurance and back the ones who we think that are the challenger ones. The only issue is when you are trying to do, it's very early stage, you can actually see a lot of things which doesn't really work out, but I think this is the name of the game when we are doing VC. Thank you, Anna.
Thank you, everyone. So let's get started. So European fintech is one of the defining venture story of the last decade, with investment peaking in 2021, producing companies like Revolut, Klarna, ADN, Checkout.com, etc. However, in the last few years, things have been a bit more tough, with fintech funding across EMEA falling sharply. In your opinion, is fintech now a mature sector where the major winners have been built already? Or is there a genuinely new cycle emerging beyond neobank and payment rails?
Who would you like to
Do you want
start?
to start?
Or maybe I should go last because I have an African perspective.
A lot to unpack there, I think, fintech has definitely gone through its various waves, and I feel like each wave gets shorter and shorter. So like in 2010, it was like the unbundling of the bank, and we saw like neobanks coming out, using mobile payment, and the customer UX was a big thing. Like the next wave was like embedded finance, where it felt like any startup could be a fintech, so long as you had the right partner. Then we had the wave of the tech boom, and it was growth at all costs. And now, the last 36 months has been like pretty tough, I think, for fintech, where unless you've really nailed the core fundamentals, there is a real drive towards hitting profitability a lot quicker and having a really differentiated proposition. So coming back to your answer, like fintech has to definitely reinvent itself to be relevant to new investors. Otherwise, you're sort of investing in more of the same, and it's super hard, I think, to displace like the likes of Revolut, Monzo, Starling, those existing neobanks. So for us, and that's kind of where I touched on earlier, we've got an AI-focused strategy that still leverages our fintech experience, but I think AI truly can be where fintechs can kind of like reinvent their model and create new moats, whilst sort of the legacy OG fintechs have to now restack themselves.
Thank you. We'll come back to this.
I agree with that. Having been in the London ecosystem, I guess on the startup side of things for 13 years right now, like to date, I'm like looking back at it, of course, is a very mature ecosystem, right? Back in 2012, selling into banks to begin with was absolutely a nightmare. I don't think today is easy, but it's much easier than it's been 12, 13 years ago. Now, if you're probably going to ask a lot of DLPs, they're going to say fintech is so overrated. Like there's been a lot of money that went into that ecosystem. However, AI is changing everything. So there's so much opportunity still, but that opportunity is shaping in a completely different way, right? Agentic payments. Like, just think of anything, and kind of goes into like where we're spending time right now, right? Workflows in anything that touches on payments and insurance, right? And then there's the beauty around what happens when on top of that, you sort of like kind of have the cross, so like kind of leakage into other sectors, insurance and health. Beautiful, right? So I think we're still going to see a lot of investment going into fintech, and I definitely believe that there are going to be more category leaders coming out of that space as well.
I can add a few things for sure. There's no doubt that fintech itself is a matured category, which doesn't really mean that it doesn't have the opportunities still, because I still hate my expenses process. I still hate my like B2B banking. Not
Should join
necessarily.
Revolut.
I actually do. I have nothing against Revolut, to be honest. Like I do enjoy that very much. We do have like a lot of different offices in around the world, so I have some of the experiences are awful. So I have the better end of the stick, but still, what I'm trying to mean is like literally in financial industries there are so many things that can be improved. Literally, this is not like nice to have. Like I still spend a lot of time talking to our like accountants, trying to identify transactions, like trying to make sure that the projects doesn't really go over budgets, like the money goes there on the right time, or the KYC. So basically, yes, I do think that fintech itself is a matured market, but it doesn't really mean that the opportunity is not there. Because as you guys also mentioned, literally, because one side in Tenity, we've been working with a lot of financial institutions. So we run programs with Visa, UBS, HSBC, Allianz, Generali. So we know those incumbents, what they are craving for. They're also trying to improve their services, adjacent services, because I think what technology enabled is competition from every angle. So you see that two banks are maybe competing. That was the basic history, and you need to innovate to beat your competition. But now Revolut can come out of nowhere and take a lot of the pie, rightly so. I have nothing. And also in insurance, we have new companies. You wouldn't call them an insurance company, but with the licenses that they have, now they're a strong insurance player. So I think the pie is getting bigger. Still, there are so many angles that you can actually have it. Yes, it is a mature market, but I think still, because it's really close to the value itself, it's quite lucrative still.
So looking at, I guess, the market that I spend a lot of time staring at, across Africa, the problems are quite different. We're in a different stage. Here, cash usage is low. It's roughly about 35%. Across the African continent, cash usage is still quite high. It's at about 80%. The most developed economy, it's a lot lower than that, but as you get further down the stack, it gets to 80%. So a lot of the fintech innovation that still exists on the continent is that demonetization. On the continent, that's mainly through the use of wallets. And last year, we have about 130 million people using wallets on the continent. 2.5 billion accounts have been opened, but 340 million monthly active users and 134 wallet providers. That notwithstanding, there's still space for monetization. So we're seeing more wallets being created and interoperability in wallets and technology that supports that. Alongside that demonetization is the payment layer, where we're seeing a lot done in digital payments. And actually, there are large Pan-African digital payment players who are emerging that are moving up the stack to merchant banking services as well. So these merchants or SMEs are underbanked because the banks actually don't care. It makes more sense to bank larger corporates. So they have the space to provide more services to them. We're seeing a lot of innovation in that, particularly in credit. And then on the flip side, similar to what you're seeing, which is quite interesting, we're seeing a lot of innovation in players, mainly AI players, helping large incumbents, specifically banks and insurance, be more competitive. In the most developed of the African markets, there's been a lot of movement and innovation in merchant acquiring, and the incumbent banks have gotten quite scared, acquiring innovation and quickly using agentic AI to remain competitive.
Thank you. And Kaan, on the back of what you said, where are banks and insurers actually willing to buy from fintech and insurtech today rather than build internally? And where have founders overestimated the willingness of incumbents to partner with them?
I mean, I think I think everybody is talking about AI. Obviously, it's kind of like a demand in the market, and also like consumers. We have seen a lot of different angles where we invested in. Like we have digital asset infrastructures for incumbent banks because it seems that a lot of people are quite interested in owning what they're actually owning anyways. And then we have a lot of like compliance coming up due to regulations in EU, maybe like a global or even like a GDPR kind of thing. So that's another angle. We have like, hopefully we will keep doing that, but on sustainability and carbon emissions, a lot of corporates are basically required to do their like reporting. So those kind of like governance, compliance things are quite easy sell to incumbents because they cannot do that internally, and that's a different part of the business. I think the core payment rails is one thing that they are not going to compete. And when we are thinking about like our emerging companies, I think AI disrupted so many things in all of the markets, including having a moat. Previously, when you had like maybe like a wealth management fintech coming to you, and you see those people leaving their like cushioned jobs in UBS, Iulia, you say that, yeah, they're working on an important thing, probably they can make it, let's back them up. Now with the AI, everything happens so fast, so it's really hard to have the moat around your business. So I think the incumbents are trying to keep their like market really, really tight, and everybody's trying to get their like go-to-market strategy, because you need to distribute whatever you are selling, even in different verticals. If you can do, probably you will succeed. And I think the easiest sells to like financial and insurance systems, not the core banking itself, because it might take some time and probably they're a little bit defensive on it. But on the like the other layers of like financial services are quite good right now.
Anyone has a different point of view?
It's I think selling to incumbents is super hard. I think. And we know that from our own portfolio companies. Like the sales cycle to sell into an incumbent is like incredibly long and unclear. And you start with a pilot, and you don't know where it's going to go. And what we always advise our portfolio companies is just like find your wedge, and just get it in. Like find a pain point and try to solve it super quickly. And with AI and tech, it's a lot easier now to sort of be able to demonstrate and solve a proof point much quicker. So that's always good. And we always say to the portfolio company, it's much easier to sell a new service to an existing customer than it is to acquire a new customer, a new incumbent. So that's one thing we've definitely seen. But the issue we find is, how do you turn that pilot into something that's recurring? And for us, like, this is where we're deeply focused on, is how do you find the thing that enables AI to work enterprise within a large incumbent that's regulated, that's worried about what the regulator's going to say if it sort of foot faults even on some sort of minor customer data thing. So for us, what we're really looking at is like, how can a portfolio company enable that AI to be deployed safely? Like, what are the safeguards that allow that thing to work, not just even within this like ring-fenced workflow, where I think things are really going to be really valuable is, how does that thing get adopted enterprise-wide in a financial incumbent? And I think that's where we see fintech being evolving.
Thank you. And Iulia, at seed stage in 2026, what do fintech founders now need to demonstrate at that stage to investor that investor would have been willing to defer to later stage just a few years ago?
I mean, I would say it's kind of touching upon what Kaan and May said earlier, right? Like, that wedge is absolutely one of the most important. I mean, founder will come first, right? Pre-seed and seed, that hasn't changed. But the wedge and understanding exactly is not just like what pain you're solving for your customer, but it's also like, what's the cost to service that pain and what are the margins around it? And then kind of going back to what Kaan said is, I mean, distribution. Because in a world where it gets easier and easier to build, distribution is what builds defensibility long term. And then I don't have to say it, right? It's like speed of execution. Like, I mean, we're probably now judging seed companies in a way that we were looking at Series A companies 3 years ago. So the game has changed, right? You need to move faster. You need to be very good at articulating why you have the right to exist in a market that's changing very, very quickly.
I mean, honestly, what I've been seeing is like that speed. Literally a few weeks ago, we were on a panel because we also talk about like creative disruption, everything that is happening with like VCs, startups. With this a story of like obviously like companies like Sequoia has been there for like 60 years, but realistically in Europe, I think we have a VC networks background of like maybe roughly 30 years, give or take, like maybe the longest ones. And most of the things actually started in 2010s, like with YCs, Techstars, even like us, Tenity. So I think most of us have like early stage experiences for 10, 15 years. And we used to call it like VUCA, like volatility, uncertainty. I mean, compared to today, that was a piece of cake, literally. Because I was talking to my friends, like I've been seeing a lot of like well-established companies values like degrading like half and half every 6 months, which is crazy. Because again, some people can come into your market, start distributing the technology. Obviously, like in a regulated market like finance, there are like some kind of moats. A lot of people are crossing their fingers that the regulators are not allowing the newcomers to come in, but the newcomers are doing it quite well. They're quite doing it.
Or that would delay the newcomers from coming in. But like, again, to your point, that delay is not going to be, it's not going to take forever.
And I think the delay there is, to sort of riff on what you just said, like for a newcomer, like your product has to be great. It has to solve a pain point. But for a financial incumbent, it has to be so good that it merits the switching cost and that initial friction that is in the incumbent, and then finding the right sponsor, like the switching. There is still a big switching cost.
Sorry, jumping off of that. Yeah. Because now we're talking about AI, seeing the same thing. And as you discuss wedge, the wedges translate into moats in our market. And we're always thinking, is there a moat that can delay or prevent a foreign competitor from coming and eating your cake in this market?
Revolut.
For example. But even much more scary in the place of AI, where the cost of production is significantly lower. And where we've seen things that make us quite excited are AI companies that build for the peculiarities of our local environment. For example, on-prem deployment, where across the world you can be using public or private cloud, or have proprietary access to government data sets, which for national sovereignty rules, foreign incumbents won't be allowed in. So your point around critically thinking through what the wedge is and what the moat is in seed has become key.
Hannah, sorry, I know you have really great questions, but just one thing. Because
we have 10 minutes
my problem
left.
with the note, because like, as you said, like, regulated industry. So there is a company called Go Abacus. I think that's their name. So basically what they try to do is like deploy AI on an on-premise ecosystem. But the problem with those kind of like companies and those kind of modes is like they need to do like 100 million Series A. I understand it, but let's talk honestly here. Like UK is kind of the outlier of Europe. Still, like some of the countries are like catching up, but US, like when you have the money, it seems like the money itself is the biggest moat. So people need to raise a lot of money just to make sure that the others cannot go into that kind of like markets, which kind of gives me some kind of sadness, because it feels like it's a technocratic battles, like it's not a fair game, because maybe I was too shy, maybe it's a little bit too stupid in 2010s. I was assuming that, smart people with engineering degrees and maybe some understanding of customers can build things which can compete with incumbents, but now the game is going back to really bloody battles that we used to have. So I just wanted to add that, like that's an interesting mode that not everybody is going to have soon, because if you don't have 100 million check waiting for your company, probably it's going to be a tough business for you.
I'm going to add to that now. And I think that's not just captive to the portcos, it's an issue for the VCs, right? Because I find like, I think VCs are now playing at the earlier stage because the check sizes where they were at A is now a seed side. So for us, we have finite amount of capital, and it's really painful when you're putting that capital into a company and you see half of that capital going out into compute. It's like it goes straight out. So it's an issue even for us. And we actually recently set up a platform, almost like a portfolio success platform, but specific to AI companies, called Common AI, where if we can aggregate everyone's demand, we can actually provide compute or get a bulk discount for compute a lot cheaper. And actually we could potentially provide, like a fractional CTO. We, recruit 1 or 2 CTOs that can provide a fractional service so that everyone is getting the best possible, but not having to pay top dollar for it. And, the idea is also if we can build thematically, people, companies don't build the same thing in isolation, but people can build things collectively. And I think in UK and Europe, we talk about, are we at a disadvantage to the US and the Chinas of the world? Frankly, yes, but, there is a way around it. And collaboration in the ecosystem, I think, is super important.
Thank you. And so back to the AI point. So founders are increasingly pitching AI-powered this, AI-powered that. Sorry if there's anyone in the room. As investors, what do you discount immediately and what actually signal something real?
Do you want to start first?
Okay, fine. We talked a lot about AI. So for us, we really like, being on the continent, mainly investing in the application layer. We really like solutions that simplify complex workflows. That's key. It needs to have demonstrable impact on the top line. I know that that's going to cause lots of debates, but find that if you're just a cost center, it's really difficult to ensure that you're able to get ACV expansion, which is eventually what we're looking for. We want to know that you have proprietary access to proprietary data sets, because that itself is a moat. And then the last thing that I sort of mentioned in on-prem, that you're able to adjust to the peculiarities of the local environment. And that way, ward off foreign competitors who can easily enter the space. So that's why whenever we see a great product that does all of that, but doesn't have clear distribution, because in the end it is still SaaS, then that's a big no for us. We think regardless of how fantastic your product is, distribution and go-to-market plan needs to be clear and effective from day one.
I'm going to stick to a very simple and fast answer. I think it's like we're not really looking at AI copilots or AI wrappers around anything. The reason behind that is defensibility. Unless you really come up with like an absolutely insane moat on like what you're building on the sort of like kind of interface layer, is very difficult to build something new in that space, at least in fintech and insurance. But I would say probably in like lots of the other sectors as well.
I can. Again, talking a little bit on the earlier stage, like pre-seed, seed, I think with AI, you don't really have any more room for like not telling, but you just need to show. If you go to an investor, you just need to show, don't tell me, because building is kind of like faster. Like this is everybody's expectation. I used to have like team technology traction on my mind whenever I'm talking to like a team, just to understand if it's like investable or not, just to understand where they're coming from, what they're building, and basically like how they've been doing. So today, if they don't really show that traction, I'm not just talking about like the dollar amount, but if you tell me you are going to build this, then they will do that, and that will lead to something else, just come then. Like it's really, really hard for me to take a chill pill and wait that you will do something in 3 to 6 months. Compared to when I first write my check, probably like 12 years ago, at the time we were writing the checks, making sure that hopefully they will have a mobile app in like 6 months. You know, like now the world is significantly different.
Yeah, I mean, I'd echo all of that. I think sometimes portcos are confusing just automation with AI. And if it's just straightforward automation that has a cost saving, that's perfectly fine as well. So just be totally authentic with what you're doing. Because I think people will really pressure test, like, what is the AI therefore generating that's differentiated? And then if it is really AI, what exactly is it doing? So is it making underwriting better? Okay, then show me, like, is it really reinforcing its learning? Can you actually show me, and can you prove to me how that AI model has arrived at a better outcome? So I think there's a lot of like pressure testing as well into the auditability of the AI model, which is ultimately an issue because the regulator needs you to treat the customers fairly. So there's quite a few different things, and AI can be used to improve revenue, so underwriting. your OPEX. And honestly, we've seen some of our portcos, which we thought were going to run out of runway, suddenly use AI, and they've like risen like phoenixes from the ashes because they've been able to do lots of things like way cheaper and way faster. So yeah, we're super excited about AI.
Thank you very much. We are out of time. As a closing question, can you please, in one sentence, and I will cut you if it's more than one sentence, give me one fintech thesis that could produce a European category leader over the next 5 years?
Agents. Like, it literally rewrites anything on the infrastructure layer, especially from like anything to do with regulated markets. So I think that's...
One sentence.
I'll add to that in one sentence. So AI agents that can be deployed responsibly and safely within a regulated space.
I don't think that I can add anything like the agents. I mean, applied
One
AI.
sentence.
Applied AI, because applied AI. For the rest, you can find me in the networking area.
I'll be different then. Stable coins. Also,
that was my second backup.
Stolen from you, yeah. Highly relevant, highly useful. Also in emerging markets, I expect to see actually a few unicorns being born thanks to stable coins.
Thank you very much. I had so many more questions we didn't have time to go through. Really enjoyed this conversation. Thank you all of you for being here as well.
And thank you so much for having us.